Welcome to this Payments International webinar. I'm Dave Birch, Global Ambassador at Consult Hyperion, and I'll be your host for this session. We're going to be, as is the fashion these days, live tweeting the webinar, so you can join in the conversation using the hashtag #PaymentsWebinar. And assuming your tweets meet some basic local standards of decency, we might even read some of those out as we go through. Now, I'm joined in the webinar today with three people who have very well informed but different perspectives on what's going on in the payments world. That's Jibran Ahmed, who's the head of R&D at Capco, Dianna, who's head of digital propositions at HSBC, and Aldo, Jong, who's a partner at Claro Partnerson. I'm going to bring those in a minute, but before I do that, I just want to remind you that we're going to be having an interactive question and answer session as we talk our way through this. So if you have any questions and you don't want to send them on Twitter, you can use the Ask a Question button at the bottom of the screen, and the questions will come through here. And I will seamlessly integrate your questions into the narrative of the webinar. That's the rough theory anyway, as it goes. So I want to make a broad outline so that you can see where the guys we've got on the line fit in. And I'm going to do that by saying that, well, I'm going to say a couple of things. So first of all, I'm going to say it is a joy to be alive in payments at this time, because unlike many of the other people on the line who are far too young, I can remember when payments used to be boring, and we don't want to go back to those days. And in the old days, you knew what was going to happen in 1 year, 3 years, 5 years. You know, there was the 8583 committee, and then you knew the POSs were going to do the blah, blah, blah. And now you have literally no idea what's going to happen tomorrow. So it's a fantastic time to be looking at innovation in this space. But I just want to make a little point about that innovation, which is that payments isn't like a lot of other industries in that it's constrained, shaped. The innovation envelope is inside a regulatory boundary. So we have to refer to the innovation in regulation, which is actually driving a lot of the innovation in our space. I think we should think separately about the emerging business models in this space. It used to be about banks. It's not really about banks anymore. It's about banks and all sorts of other people. And then in the context of those two, we should talk about the technologies that are coming into the space and how they're going to change things. So I hope that sort of gives you a sort of rough three-way pattern for thinking about the discussion that's going to take place. So let's move to our guests now and find out what they think about things. So I'm going to ask them just to quickly introduce themselves and tell you why they're on the line and why they're interested in this topic, and then we'll open up the discussion with a few questions. So let's start with Jibran. Can you tell us what you do essentially?
Hi. Yeah. Thanks, Dave. So I'm head of research and development at Capco, where we look at some of cutting-edge technologies like machine learning, artificial intelligence, distributed ledgers, and try and understand how those technologies will evolve in the near future and what problems we can solve within financial services using those technologies. Our focus is very much on pragmatic solutions within the next few years rather than looking too far into the future. And our experience in working with all manner of financial services firms means that we can provide that pragmatic and realistic view on how these technologies will evolve and how we see the future of financial services unfolding.
And when it comes to the innovation side of things, do you see much happening down on the coalface, or is it just people like us talking about it?
No, we actually see quite a lot happening within financial services and within payments in particular over the next few years. It's a hot time in the industry given the evolution of technologies, some of which I just mentioned. And we've seen these technologies already really take off in other industries. And financial services naturally is a little bit slower, as you mentioned, because of the regulatory constraints. But we think we are on the cusp of major changes within financial services in all sectors, really, not only payments.
Cool. Dianna, what does it look like from a bank's perspective? Oh, sorry, can you just explain who you are and then say what things look like from a bank perspective at the moment?
Sure, yeah. So my name is Dianna Biggs. I'm head of digital propositions at HSBC for UK and Europe in the retail bank and wealth management group. As you know, and I joined quite recently, and it's actually a new role for the bank where I have oversight of all the business model innovation projects. And for us, it's really looking at the opportunities to do test and learns around some new kind of digital proposition ideas, which might be of value to our customers, as well as partnering with FinTechs and other third parties to look at helping to further those propositions and the advantages that we can offer to customers. So some of the themes that we're really focused on at the moment would be, of course, open banking and PSD2, digital innovation, digital payments, as much as that is sort of a key use of a bank for its customers.
Yeah, and I think it's fair to observe that since something like, I can't remember the exact statistic, but I think 85% of UK customers' interactions with their bank are through payments. Payments has a critical leverage role. So even though we all understand that the margins are vanishing in payments, that doesn't mean payments are any less important to the bank. Is that broadly correct?
Yeah, exactly. So it's definitely a key touch point. And then just looking at the overall shift to digital, I mean, I think 93% of contact with the bank is made now via a tech device, like either through your mobile or the internet. So those bringing those two together is often key.
And Aldo, you have a perspective from, I mean, you have a few different perspectives on this actually, but can you just explain to people what you do? Because it's not at all clear to some of us. And then just say something about how you feel about innovation in payments at the moment.
Yeah, likewise, Dave. You could do that too. So I'm the co-founder of Claro Partners, and Claro Partners is a strategic innovation firm. And we help companies to what we call navigate disruptive shifts, meaning what are the disruptive shifts that are coming at us, and what should the response be, or even better, how could we as a company, our clients, how could they as a company lead a new disruptive shift? So we work with leaders affected by disruption. So we don't exclusively work with financial services. But as we all know on this panel and in the audience, I hope currently definitely financial services is one of our key focus areas. About half of our clients are banks and insurance companies. Our focus is very much on understanding the customer perspective, or better said, people perspective. So we do a hell of a lot of ethnographic research to really understand what are the needs, drivers, behaviors, expectations of the future customer, and then we combine that with an understanding of what the emerging fintech landscape looks like, so you can cross those two and see where things are going.
And can I just ask, Aldo, because you make the point that your speciality, and of course is where I know you from, is at the sort of more disruptive end of the innovation space. But do you see what's happening in payments as being disruptive, or do you think we're possibly exaggerating that slightly, given that the last new thing that I can remember is contactless, and that was a decade ago?
Yeah. No, absolutely. The payments space in terms of new value propositions has largely been disrupted already. There's a lot of new offerings already out there by a slew of fintechs and banks following along. And so it's also therefore the biggest area in our fintech landscape. Adoption of many of those new services, even something that has been as long around as PayPal, is still quite minimal. So while we don't focus, so a slight correction there. So we focus on understanding disruption to be able to help companies to create better products. So our clients, more often than not, don't create disruptive innovation. That's not what we do. We help them respond to the disruption.
But I'm just trying to dig a little harder on what's disruptive in payments at the moment, as opposed to merely interesting and fun and different. What is it that's disruptive?
So I think that one of the models in payment that hasn't been successfully disrupted yet is the oligopoly between the credit card companies who charge very high fees and make a lot of money from that, but also pay out very large amounts in fraud in the order of magnitude of 50 billion a year. And so that's an area that hasn't been disrupted at all. Also, today, it takes still many days before money arrives from one bank account to the other, if it's cross-border usually. And so those are areas that definitely, there are solutions out there and people trying to build something, but because there's no wide adoption yet or no trust yet, there's still a lot of work to do in those spaces.
So these legacy dinosaurs who are, preventing innovation in this space, who are content with the status quo, there's a special word for them. What is it? Customers. So can we move on and talk about something else for a moment, like regulation? Dianna, what's going on in the world of PSD2, CMA, and open banking?
Yeah, so well, here at HSBC, we see this really as an opportunity for innovation. I mean, as I am sure you know, there are the CMA changes that are happening in January, so for the major banks in the UK, and then that will be followed by PSD2 changes in Europe. I don't know, do you want to give an overview to everyone on the call, or?
No. What I'm fishing for is actually what you've already answered, which is that because I'm trying to push this point of where is the real innovation in payments, and as you've pointed out, actually it's being forced upon us because open banking, APIs, CMA remedy, this is pushing us to be innovative. We have no choice, because if we don't respond to those kind of things, third parties are going to come in and just take that away, right? So I guess what I was fishing for is there real innovation? Yes, it's being driven actually from the regulatory side.
Yeah,
Jibran, can I ask you one? Oh, sorry, carry on.
I was just going to say, I think that's what makes this situation so unique. And it may not have happened otherwise, but given that the regulators are bringing that first, I think that there are chances that we'll also see that replicated in other geographies. Because it has been driven that way, but maybe you take a different view on that.
No, I don't see any problem in saying that innovation is being driven by the regulators. Actually, that's what the regulators want, isn't it? And if it results in better services for the customers, which I'm pretty sure it will because of the increased competition, then that's a good thing all round. I think the implication for banks, it might well be that yes, they have to develop some other lines of business rather than relying on the transaction fee income, but that in itself is not a bad thing. Jibran, can I just ask you, before we go to the questions that are coming in from the listeners, can I just ask you one more thing about the technologies? So in payments in particular, which are the I mean, you talked about things like machine learning and so on. I mean, are those being really applied to payments yet, or are those just a little more general?
So they're a little more general. I don't think machine learning itself will have a massive impact on payments directly. It's what you can do with the data you have from all the payments that your bank or financial institution executes on behalf of its customers that is a lot more interesting. Right. And with the advent of PSD2, CMA, open banking, etc., the amount of data available to you as a financial institution, as well as other firms or organizations which may be offering financial products or other services off the back of the data that's available through these APIs, machine learning, data analytics, artificial intelligence, etc., opens up a whole new line of servicing customers that previously didn't exist. A key element for me from open banking and PSD2 is that third parties, for the first time, having access to banking and payments information in real time, means that the use of machine learning can allow you to target customers more specifically and create tailored products that are more suited to a smaller segment of customers. Therefore more
that's
appealing.
a great point.
Yeah.
So what that's saying is that the data that goes around the payment is becoming essentially more important than the payment itself, but to the banks.
Yes. Yeah.
That's a fair point. Okay, right. Let's see what the important people, the viewers, the listeners actually want to hear. Well, of course I'm viewing because I've got the camera thing here, but fortunately none of these people can see me. So let's go to what the listeners. So we've got a long-time listener, first-time caller, Emmanuel from Gain Capital, and she says, was MasterCard innovative when they acquired Vocalink? What do you guys think about that? Hello, is there anyone out there? What's gone wrong with this?
No, I think
it's going to be really boring for everybody if I answer all the questions. It's dull, especially because I don't know any of the answers. So can someone help me out here?
I'm not sure if I'd describe it as innovative. I'd say Vocalink, certainly in the early years, were an innovative firm. From MasterCard, I see it as a move to maintain or develop market share and essentially keep a hold of the payments channels and maintain revenue, as opposed to we're going to do something really, really innovative from a tech perspective. And I think we'll see more of that. I think there's thousands and thousands of fintechs out there, hundreds in the UK alone going after the payment space, doing clever things with new technologies like distributed ledger, doing clever things with international payments or foreign exchange. And I think as we see some of these emerge and become more successful, we'll see the larger payments firms or financial institutions, banks, etc., snap them up because they'll see it as a revenue-making opportunity or a threat, whereby if they don't act and acquire a startup that is taking their market share, then they'll lose revenue.
I wouldn't really call Vocalink a startup. But Aldo, what do you think? I mean, I think Jibran's right about that. I'm not sure if it was innovative. I think it was a brilliant business move. But is it innovative?
So you're asking me. So I think that I think it will drive a lot of opportunities for innovation. So I don't think the move itself was innovative, but it will drive. It opens up opportunities for innovation for them.
Right. Okay. Well, let's move on then, because I've got a question here from my good friend Kerry Hurley at Vocalink, which I'd like to start with Dianna. So Dianna, Kerry's asking, where's the focus? Internal innovation within incumbents. I know that you've been asked this before. Internal innovation within incumbents, or do basically they just wait until startups do something and then acquire them? Or is there the potential for some of the startups to become major players? I don't want you to tell us what HSBC's secret plans are, but just I know you've been in this field for some time, so can you just give us what your personal feelings about that are?
Yeah, so I think that the space is definitely big enough for both fintechs and the banks to coexist. I think that you'll see. I would assume that most would probably be taking on dual strategies, and from what I've seen before, where there is innovation being driven internally, and then also an eagerness to collaborate and work with startups where that makes sense, depending on the particular needs, the type of technology, and also the human resources, because it is obviously a time of shifting internally for many corporates towards being more digitally focused enterprises.
But is the I don't want to say, because it's just too easy to say banks can't innovate because of their structures and their legacy and so on. But I mean, just as a general point, is it just too difficult to have innovation inside the incumbents?
Personally, I would say no, but I think that you need to have a strategy and to have a leadership within an organization that wants that to happen, and to have teams that are hiring accordingly. And that's certainly been a big focus here. And then, of course, with that vision and those priorities, creating the enabling infrastructure and procedures that go around that are necessary to allow that to happen. Because it's obviously you're operating within a very different context than in a fintech.
Well, also Aldo, I mean, aren't there constraints around innovation in this space because of the network? Because it's a two-sided business. So in other words, if I'm a bank and I decide to innovate on my, I don't know, login or what I do with my ISAs or whatever, I can just go and do it. But if I try and innovate in payments, I've got to go and start persuading, Tesco to take my amazing new Dave Pay or whatever it is. So payments is naturally constrained, isn't it, in what's possible?
I think that also makes it interesting.
It is, yeah. Go ahead, Dianna, if you want to answer.
No, I was going to say, there is sort of where you can see potentially one opportunity for FinTechs and the large organizations to create partnerships just to drive those kinds of economies of scale that are required for something like payments.
Yeah. Okay, let's go to another question from the floor. Ari from Nordea says that EBA is fostering instant payment across Europe. So the SEPA credit transfer thing starts in, is it October or November? I can't remember. It's fairly soon. Although that's a voluntary thing, isn't it? I don't think it's mandatory. But Ari says, what would happen if we used blockchain for this? We could interchange payments in seconds. So is that a realistic thing? I mean, all I heard about earlier in the year was blockchain. I'm not sure if it's still a thing. Dianna, what do you think about this?
I would say that it's still very much an early stage technology, and as we've seen with some of the recent movements in the market with ICOs, et cetera, there are definitely some scaling issues that need to be worked out in terms of congestion on their own infrastructure, the time that it takes to make transactions and some of those blockages. So I'm not quite convinced we're there yet. But I think
we'll
be seeing more and more.
Yeah, I mean, I guess what I was needling about is, we've heard a lot about blockchain for the last couple of years. It's not obvious to me it's getting any closer to mass market deployment. But does it contain the germs of some innovation inside it somewhere? Aldo, Jibran?
I think it does. Anyone who knows the details of blockchain technology knows it's not revolutionary as a technology. It's a combination of three technologies that have been around for over a decade. I think it will have an impact in financial services, but will take time. And the reason it will take time
hold on a second. What are the technologies that have been around for a decade? To make that clearer for people.
So cryptography, the Merkle tree ability to ensure traceability of a transaction, and what is effectively peer-to-peer networking. Those are the three technologies that constitute a distributed ledger technology or blockchain. And the combination of those three into this new formulation back in 2009, 2010 is what gave rise to blockchain and Bitcoin. And I think within financial services, that combination of technologies will have an impact. I think it will take time. It won't be next year. It will be a few years from now before we start seeing real use cases being deployed in production at scale. And that's not because of limitations in the technology. I think the technology is evolving quick enough. It's more the nature of financial services, the points you touched on earlier, where you can't innovate by yourself, particularly in payments. You need others to be on board. You need regulators to be on board. And all of that means you need to define protocols, you need to define working group strategies, approaches, etc. And those things.
Yeah, but that's the sort of thing. That's the sort of thing our industry should be good at, right? Because we, unlike a lot of other competitors, we have a heritage in forming, cross-organizational structures to do this and standards and protocols. Payments guys should be good at that. Visa and MasterCard have thousands upon thousands of pages of operating rules and regulations. I mean, we know how to make that stuff. So shouldn't we be good at doing it?
I think it depends on your definition of good. I'd say we're effective at forming these committees and things such that we minimize risk and disruption. I think we're not good at doing them quickly, and that's the challenge. And I think blockchain technology. I think blockchain technology will have a bigger impact in the non-payment side of financial services. So, middle and back office functions where you're having to carry out complex or often manual operations across multiple systems. Within payments, I actually see a limited number of very, very good use cases for blockchain, because I think being able to conduct a domestic transaction in seconds using a blockchain is of limited value in the UK in particular, given we have the faster payment service. And therefore, you need to look at use cases where blockchain is actually useful and is worth the investment. And so international payments might be a good use case if you can get enough of the international correspondent banks on board. But again, for the reasons we mentioned earlier, that's probably several years away rather than within the next 12 months.
All right, let's take a couple more questions coming in here. So let's talk a little bit about the open banking and APIs again. So I've got some questions here coming from Carlos and a couple other questions here. So I would say, so tell me if this is a correct characterization from your perspective. A year ago, banks were very fearful of open banking, and they were dragging their feet a little bit on it because, quite rightly, they figured if third parties can start having access to their customer account data, they'll be put at a significant disadvantage. Whereas I think kind of mentally that's swung around recently. So now, just to go back to Dianna's point, I think banks are, beginning to see the opportunities for innovation in this space. If other people can see my customer account data, I can see other people's customer account data. And if I provide API access into things like faster payments and so on, I can get some opportunities. So does this mean, and I'm going to put you on the spot a little bit here, does this mean that we're going to see new payment types coming into the marketplace in, let's say, the next 12 months or so, specifically because of open banking and APIs?
I would say definitely. With all these new technologies or new regulations, the trajectory is typically first ignorance, then there's a focus on compliance and not thinking about innovation. Then there's a phase of fearfulness you were talking about, and the smart ones are seeing opportunity in any disruption. So this is a disruption by regulation. There are huge opportunities. But I do think that a lot of the changes that we will see, we will see them from movers that can move very fast and are very customer focused, and that's the problem. A lot of the banks are at this moment not customer focused, even if they say they are, and therefore there's only a few of them that actually are, and they will grab this quicker because they see what are the pains today that their customers are having that they could solve. And of course, the technology companies and startups are going to be those fast movers who then might be acquired or partnering with some of these lower incumbents.
Well, the technology companies certainly. I mean, because obviously you can see the logic there. If I'm Facebook and I already have a payment institution license, then when I want to send, if a person wants to send some money to their friends, I want them to do it from inside Facebook, right? So I just want to put £10 in the Facebook Messenger box and have the £10 go to my friend. I don't want to come out and run some stupid bank app and have to log into it and all this kind of thing. So I can sort of see that.
Exactly.
But I wonder if there are other categories there. I mean, I think retailers, it strikes me, are a category who haven't really played their hand in this space yet. I mean, once the big retailers get direct access to customer accounts, wouldn't you have the suspicion that they would heavily incentivize customers to go down that route rather than use existing infrastructure like debit and credit cards?
That's quite possible, because today they're paying very high fees, right, for the debit and credit cards, and so they're
well, I think they're paying
getting out of there.
I think they're paying quite reasonable fees for the excellent services that are delivered by Visa and MasterCard, the combination of the payment guarantee, fraud protection, and so on. But I mean, I guess we could argue that point at another time. Can I ask a last question, just to go back to the floor, so to speak? Can I ask one more question? Someone, Farhan, has come back to this point about MasterCard, and he says, MasterCard, appears to be doing some great things. It's becoming more than a card company. Can I just ask, isn't that a sort of general point? I mean, don't Visa and MasterCard and the others have to become more than card companies? Because surely the card volume is going to be hit by this transition to instant payments, open banking, APIs, and so on. So isn't there an imperative of them to innovate beyond just payments? Or can they be successful just with that payments business for some reasonable time?
Maybe think about payments just as sending a few bytes of information. We know very well already how to do that with text, with email. It just now needs to be a little bit more protected. So definitely they would need to find ways to
well,
innovate.
But that's not a silly point, because one of the things we were going to discuss at the conference is, when you go to instant payments, you have instant fraud that follows it, and you read in the newspapers every day about, well, not every day, but most days. Well, every day I read a lot of these things in the newspaper about, I log on to HSBC and I tell them to send some money to my builder, but really I'm sending it to some fraudster, and then I can't get it back. And this is because the fraudsters have got into the builder's email server, because email isn't secure. I mean, the truth is, if we were all using, WhatsApp and Signal and whatever for this, wouldn't we all be better off anyway? I mean, they're more secure channels than what we have at the moment.
The credit card data is just a string of numbers. So if somebody gets that string of numbers from me, they can make payments on my behalf, and that's what's all the time happening. So the tokens have been around for quite a long time, and so it feels as if there's a desire to maintain the status quo and not adopting these more fraud preventing methodologies like tokens.
Well, I mean, I don't know whether Dianna would agree with this, but I think presumably risk, security, fraud, these are the sort of things that banks are good at. These are the sort of things they can prosper with in this new world, aren't they?
Exactly. So I think that's definitely somewhere where we hold the expertise from dealing with those issues. Yeah.
Okay, good. Well, look, I've got to. We're running out of time here. So before I wind up, first of all, I want to say thanks very much for dialing in today, guys. I really appreciate it, and thanks also very much to the people who asked questions, because that saved me from getting onto my list, which is quite boring. So that's very good. I want to remind all of you that if you enjoyed the discussion here today, all four of us are going to be discussing this in a few weeks' time at Payments International, 12th to the 15th of September at the Hilton London Tower Bridge in London. So go over to payments-intl.com to discover what else is going on there, and especially come along on the Friday to join in the day there. We're having discussion tables. We've got guests coming in. It's really going to be a lot of fun. And if you think that the four of us know everything about payments, you're wrong. And there's a whole bunch of other people there who know more about it than we do. So we're going to learn too. So come along and join us. If you've got any feedback on today's webinar or any recommendations for future webinars, please do complete our short survey. At the end of this webinar, it should flash up on your screen shortly. Terms and conditions apply. Thank you very much and goodbye. Welcome to this Payments International webinar. I'm Dave Birch, Global Ambassador at Consult Hyperion, and I'll be your host for this session. We're going to be, as is the fashion these days, live tweeting the webinar, so you can join in the conversation using the hashtag #PaymentsWebinar. And assuming your tweets meet some basic local standards of decency, we might even read some of those out as we go through. Now, I'm joined in the webinar today with 3 people who have very well informed but different perspectives